Okay, welcome back. Here we go. Second half of chapter 5. So we're talking about different types of health insurance companies, and we're going into HMOs, so health maintenance organization, okay, and they provide a broad range of services to its members, and probably the key distinguishing feature of an HMO is that the insurance company that is the HMO, it is a form of insurance, an HMO, pays the healthcare provider a fee up front, okay, for each patient, regardless of what the patient needs to have done. And so the HMO is supposed to work within that fee structure. In other words, they have to know the statistics on how much each patient in the system is going to cost them, and hopefully their fee that they get from the provider, from the insurance company, is higher than what the cost of the actual patient is. And so this is a real focus on keeping costs down for the healthcare provider, for the system, to keep their costs down, and also to keep their patients healthy. Okay? If their patients are healthy, then this is profit. If their patients aren't healthy, then it's going to cost the provider a lot of money to take care of those patients. So that was the idea behind HMOs, and it's about 40 years old now. So cost control on the part of the provider, which with a traditional indemnity plan, cost control is thrown out the window. Make sure that, yeah, because the provider gets paid for each service that they provide. So they want to provide a lot of services, okay? And then, so if you're a member of an HMO, so you're an insured, you're the customer, then you've got to use the providers in the network, only in the network, only the healthcare providers that agree to be part of the HMO. So when you put together an HMO, you go to doctors and you say, will you be a part of our HMO? And if you say yes, that means we're going to pay you a prepaid fee for each patient. But if your costs for a patient exceed what we pay you, you're going to lose money. Okay? All right. Savings bank, this is so small. Once again, I guess they have to include that, but it's not on the test. Okay? Not on the test. You can see that it's really not important. You may see some stupid, obscure question on the licensing exam, but it's really not important. You don't need to know that. Okay, so now let's get into some of the different functions and marketing. Now we're talking about marketing. Okay. So an agent is someone who legally represents the principal, the insurance company, and has the authority to act on the principal's behalf. So what the agent tells you is legal. It's good. The agent will obligate the insurance company. Okay? So this is on the CFP exam. This is on the licensing exam. Authority granted to an agent may be expressed. What does that mean? That means there is a contract between the agent and the insurance company where the insurance company says in the contract that the agent has the authority to act on behalf of the insurance company. It is contractual. Okay? So that's called expressed authority. Then there's implied authority. So these are legal terms, and so if you get into a legal battle with an insurance company and with an agent, this is what your lawyer is going to be arguing over. Implied, the agent is assumed by the customer to have this authority in order to transact business on behalf of the insurer. Okay? So the insurer confirms this by allowing the agent to do things like exceed your binding limit. What this means is, if an agent has done something that is not explicitly stated in the contract, and the insurance company allows the agent to do it, they don't come back and say, no, 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 you can't do that. Then, from that point forward, the agent and the customer can assume that the agent has the authority to do that. So the insurance company has to be very careful. When an agent does something that's not listed in the contract, they have to be very careful to come back and state very clearly, we're going to let you do this, but it's not in your contract. Otherwise, it becomes a legally binding action. So, exceed his or her binding limit. What does that mean? Well, it only applies to property casualty insurance, but when you get a new car, you call your insurance agent and you say, I just bought a new car. And your insurance agent has the right to say, okay, your automobile insurance is now in effect and it covers your car. You can't do that with life insurance, okay? You can't fill out an application and have the agent say, you now have life insurance. In life insurance, the application has to go to the company and the company has to approve the application. Not so in property casualty insurance. In property casualty insurance, the agent has the right to tell the customer, you are now covered. And that's a big deal. That's a very big deal. All right. So again, implied has to do with actions between the agent and the company. All right. And then lastly, we have apparent. So we have expressed, implied, and apparent authority. All right. This authority happens when the client sees how the agent acts, hears what the agent says, and believes the agent is acting on behalf of the insurer. So implied has to do with the relationship between the agent and the insurance company. Apparent has to do with the relationship between the client and the agent, not the insurance company, but the client and the agent. So there are three parties involved: the insurance company, the agent, and the client. With implied, we're talking about the relationship between the insurance company and the agent. With apparent, we're talking about the relationship between the agent and the customer. Okay? All right. That's important, and that's not explained very well in the CFP material. I think I might have missed that one on the exam. That's why I make a big deal out of it, because it's like, oh, if you'd explained it right, I'd have gotten it. All right. So the principal, the insurance company, is legally responsible for all acts of an agent when the agent is acting within the scope of these three types of authority. Okay? So that's when the client, so what happens, what typically happens that triggers these debates? What do you think? What would cause a debate about whether an agent was acting on behalf of the company? Well, if a client files a claim and the insurance company says no, and then the client says, wait a minute, my agent told me that I was covered. Now you're telling me I'm not. Now the principal, now the insurance company is in trouble. Yeah, they got it covered. All right. So a property and casualty agent has the power to bind the insurer. That means make the insurer legally obligated to pay a claim. So a binder provides temporary insurance until the policy is actually written. Okay? So you'll get the policy in the mail. So you get a new car. You call your agent. First thing, before you get in the car, you call the agent, you take a picture of the VIN number, and you send it to the agent. The agent looks up the VIN number and then says, you're bound. Okay? Then 2 weeks later, you get the policy in the mail. Okay? A life insurance agent normally does not have the authority to bind the insurer. Okay? So that's a big difference, and yes, that's a question on the test. The applicant for life insurance must be approved by the insurer before the insurance becomes effective. So there's a lot more underwriting, there's a lot more due diligence and research that is done by insurance companies for life insurance than for property casualty insurance. Because, particularly with automobile insurance, you give them the VIN number and they can look up everything they need to know about the car. They already have your driving history, so all they want to know is, what kind of car is this? Now, you know, you need to know if you had a $10,000 car and you traded it in for a $70,000 car, you got to know that your insurance rates are going to go up. Okay? That's going to happen. Now, the agent may not tell you that up front, but you got to anticipate that. And let me just put it to you this way. If you can afford a $70,000 car, you can afford the additional insurance. Don't whine about it. Okay? We were looking for a car for my son, and we jumped into a car. We thought it was a V6, and the guy said this was a police car. It's got a 400 horse Hemi engine in it. And I called my agent, I sent the VIN number to him, and he said, "Elsa, it's going to cost you $400 a month to insure this car," as compared with like $100 a month for a regular V6. Okay? I was with a guy at lunch the other day, and he was talking about people living on the golf course not wanting to pay a $25 monthly fee. They were complaining and screaming about it. We're not going to do it. Listen, folks, and the reason I bring it to your attention is you got to think through this. If you buy a lot on the golf course, you're paying a lot more than the people across the street are. Okay? You can afford to live on the golf course, and you can afford 25 or 40 or 50 bucks a month. Sorry. And by the way, if the golf course goes out of business, okay, what happens to your view in your backyard? And what happens to the value of your lot? It's going to be cut in half. So again, you hear these stories about people who say, "I'm not paying $25 a month." Like, are you a moron or what? Sorry. You know, you can afford $125,000 or $150,000 for a lot, but you're not going to pay 25 bucks a month to make sure that the golf course is taken care of and that's your view? Woo! Same thing with the car. All right, that's just part of it. And I looked at my son and I said, "I ain't paying $400 a month for your car insurance. Sorry." All right, so agent versus a broker. A broker is someone who legally represents the insured. Who is the insured? You, the customer. An agent represents the insurance company. I'm a State Farm agent. Who do I care about? Do I care about you? No. I really care about the company. That's the way it's set up legally. Okay? But a broker is someone who comes to you and the broker says, "I am representing you. I have licenses with 20 different insurance companies, so I'm going to shop your deal around and I'm going to find the best policy for you. It's going to give you the coverage that you want at the lowest possible premium." That's my obligation. Okay? So the broker solicits applications and finds the best policy they can find with a number of different insurers. They're independent. They're independent. You know, if you go to State Farm and you want to buy life insurance from State Farm, they're going to sell you a State Farm policy. Okay? Is that going to be the best policy for you? Maybe, maybe not. You're not going to know that by going to an agent. Unless that agent has the ability to shop around. Now, I know I use an agent, and he's at Northwestern Mutual. And Northwestern Mutual has given him the right to shop around for certain types of insurance. So for life insurance, he shopped around. And that's what you want. You We want somebody acting as a broker. All right. So the broker is paid a commission from the insurance company where the business is placed. Okay? Now you got to be a little bit careful about that. Okay? Because you go to a broker who's supposed to represent you, but the insurance company's paying him? I don't really like that. I'd rather pay you. That way I know that you're working for me. That could be a conflict of interest. All right. The broker does not have the authority to bind the insurance company. That's different, because they're not acting as an agent. Okay? Surplus lines. Okay? License to place business with a non-admitted insurer. What's a non-admitted insurer? An insurer that has not been approved to do business in a particular state. So, we haven't talked about insurance regulations, but the insurance industry is predominantly regulated by the states, not by the federal government. The federal government will step in and regulate anywhere where the state government isn't covering it. But 90% of insurance regulation comes from the state. Every state has an insurance commission. Okay? So, a surplus lines broker can be doing business in a state and can find a policy for a customer in that state with a company that has not been admitted or accepted into doing business in that state. So that's typically an unusual situation. Okay? Somebody has an unusual need and goes to and cannot find insurance to cover their needs, so they engage a broker who knows of a company in Maine that offers this insurance. Okay? Here we go. All right? So, we have come to the end of the line for the day. Slide 22, so we'll start on slide 23 on Thursday. And we'll move on. Okay? Peace out. Shalom. Go enjoy your day. Peace out.